This is our Forex blog for September 14th, 2012. And like we do most days, we want to buy the strongest currencies versus the weak and sell the weakest versus the strong. The first part of our three-step Forex trading system is identify which currencies are the strongest, which are the weakest, and like I just said, buy the strongest versus the weak and the weakest versus strong. Swiss, Euro, and Pound are the strongest. The Yen, New Zealand, CAD are the weakest over the last hour. And our real-time trend shows up in histogram format on the top. Underneath that we have the weekly or 15-minute trend, hourly trend, daily, weekly, monthly. And obviously the more time frame trends that line up, the higher the odds that the trade will work. And if it does work, the higher the odds of it moving a considerable number of pips. The key to trading is small losses, big wins. And if you're losing 5 to 10 pips when you're wrong, and making 10 to 50 pips when you're right, maybe averaging 15 to 25 pips on good trades, losing 5 to 7 pips on bad trades. Keep in mind, once the market starts moving your way, you move your stop tighter. So if your initial risk is 10 pips, after it moves 6, 7 pips your way, you might only have a 5 pip risk at that point. And a lot of times I move my stop to break even once it moves 8 to 10 pips my way. And if the trade pauses, I'll tend to exit half my trade at 10 pips and then maybe be stopped out at break even on the second half. So that's averaging 5 pips on those trades that really never take off. So step one, you want to buy the Swiss, which is strong. What would you want to buy it against? The Yen's extremely weak. The CAD was weak on all time frames except the monthly, around 830 right here. So the CAD Swiss is not a pair we normally leave running overnight, so can't show all of our real-time tools. But weak CAD, strong Swiss, especially, like I said, when the CAD got really weak here at around 830. Here's 830 right here. And it pretty much trended straight down. And there's a lot of different ways of trading with this. You can use our new intraday value area method. Put on, for example, the 60-minute. And this will show you where the market spent most of its time during the previous hour. And by knowing that, you know where most traders have the bulk of their positions for each period. So you can see at 8:30, when it's underneath the point of control, which is the middle line, this is where most traders had positions. And of course, the trend went down, came up. It's not a coincidence that it found resistance here. Then during the next hour, it found support here because this is where most traders had positions during the previous hour. So, you can still, once this is in a downtrend, short right here. But if it comes down here and stalls here, you'll know to get out. If it breaks through it, you're likely to have a big, trend on your hand. And notice how when it opens underneath the point of control of the previous hour and the market's going sideways and breaks down, it goes down. That's just the way the markets work. So that's one currency. Obviously, the yen was extremely weak at 430. One of the stronger ones at that time was the euro. So you want to look to buy the euro-yen earlier in the day. Let's move this chart over. Notice that this price is above the previous day's high right here. It's above a Fibonacci retracement level that I draw each night. So this is a very key level. Once it breaks above it, it's likely to trend up. These are fib targets that I anticipate being the possible highs of the day. And because the euro and the euro-yen have already moved up a lot, I tend to put those fib levels at closer areas, and that's why it got penetrated today. But basically, once you see a lot of strength on there, and especially pullbacks without much weakness, very high probability place to buy, and of course the trend just explodes up. You can also use, for another very easy method of getting in and out, use our new digital signal processing based moving average. I put a 5 period on here, shifted 2 bars to the right, and click DSP, digital signal processing. This is very fast in hugging the price, and you got a pullback right here. I usually myself like 15 to 25 pip pullback. The more up it is, the more I'm going to want a 20 to 25 pip pullback. This really just kind of went sideways and started taking off, so I'll be happy with a 10 pip pullback here, or I'm sorry, 15 pips, 12 to 15, 101.30. So if it pulls back to 101.15, which you can see it did. It pulled back to 101.10, pulled back 20 pips. When it goes above this area, I'm long right here around 18. I put my stop underneath the low right here by a pip or two. And you can see it went my way and then pulled back. There's not a whole lot of weakness. All the other longer time frame trends are up. And when it starts going back up, this is when I'm moving my stop up underneath these bars low, and I'm moving it to break even just in case it does fail. And then you can see at that point, especially in this bar right here, other euro pairs are going up with a lot of intensity, and yen pairs are getting weak. And of course, this thing just takes off. So when it's above our upper containment bands, I would have got out of this trade up here at 93 with a massive 70 plus pip win. Now, when you're risking 10 pips and making 70 pips on some trades, it's really going to increase your average. And really, that's the key to trading. Small losses, big wins. That's all you got to do. Let's look for some other ones that was strong earlier. The euro and the Swiss are pegged together. So obviously the Swiss yen also went up. It had to. And it's loading the value areas right here. Sometimes the market will go up and go sideways, and you can see as it goes sideways right here, it never broke and closed underneath the point of control of the previous hour. Even though the market shut up the previous hour, it spent most of its trading activity right here at 83.80. And whenever you see a ledge pattern like that where the price pretty much can't get above or below the point of control, it's going to go up, as you can see. And then in this case, the next hour it pulled back underneath it, came back above, good signal to go long. And once the market already makes a big move like that, draw your fibs, and usually you're not going to make any more than the second fib target up off of a big swing like this. And you can see the market went a little bit past the first fib target, 1.382. As soon as it runs out of steam, you're out. But whether you got into, more than likely if I got into a trade here, I would have got out with a small profit, and then this last one was a runner where it went up by more than 50 pips. Today was a wonderful trending day, when you find these opportunities. The Australian, strong on most time frames. The yen, again, was weak. So the Australian yen is another one that you could have looked to buy today. I notice this one, it just exploded up today, way above our upper bands. And most of the time, when it gets above the upper bands, you're going to get a big pullback. Whenever it's above the upper band like this, you can always draw your fibs. If you're lucky enough to find it going to the next fib target, which it doesn't appear that it didn't quite make it there. These are probably 90% likely high probability trades, but it was just a few pips underneath there, 4 pips actually. So, you might have taken a stab at a counter trend trade there, just because anytime currencies go up too much, they typically pull back at least 20 to 50 pips. And you can see this one pulled back from 83.10 all the way down to around 55. So, more than 50 pip pullback. Let's put the digital signal processing base moving average on here to show, how easy that is to find high probability trades. 5 period shifted 2 bars to the right, and I just like to make the line 2 pixels thick and click digital signal processing. And you can see, it's a really good entry and exit. When you're above the upper band like this much, I'm not buying this one right here, even though that would have generated some profit. This one pulled back. It's still above the upper band and likely reverse. But when it came down, up, down again, didn't break that low, I might have taken a stab here with a small profit. And again, I'm going to wait for a deeper pullback. So I might have got in here and lost a little bit, got in here, made a little bit, and then the second trade in at 57, out at 71. And this is a questionable call. But you can see incredible strength, more strength than over the last few hours. You could take one more stab at it, and the fib target of this move here is where you're likely to get out at. So more than likely, I would have got out to 1.382, which is pretty much right at my fib target I did last night. And the market was so strong today, it shot by these fib levels. Normally, that does not happen. These are usually lines in the sand. But when there's fundamental reasons to move currencies, they tend to not obey technical levels much at all. The pound, pretty much a mixed trend. The weekly trend was down, the monthly trend was up, the daily trend was up. after an hour or so of pullback right here, it was previously strong. You might have, gotten into a trade here coming up to 9 o'clock by buying. The yen was extremely weak on all time frames, had a little bit of strength. It's pretty safe to assume that the downtrend will continue, and of course it did. So coming up to 9 o'clock, the pound yen was an excellent one to be looking to buy the pullback. Here's 9 o'clock. You can see it broke out and went up from around 126.60. There was an easy 40 pips there, or if you were just scalping, you probably made 15 to 25 on that trade right there. And above the upper containment band, it's very risky to buy. Most times if you buy above the upper band, you're going to lose money. I'm in the process of rewriting our FX trade signals. These are generated based off of the old containment bands that we had in the past that aren't as quick as the new ones. The new ones are based on digital signal processing. Anytime there's an explosive trend, the moving averages catch up to price much faster, so the bands are a lot farther away.